Hey guys, it's Doc's Market Minute for Monday, September 28th. This morning I'm looking at the Russell 2000, and the Russell 2000 is not in good shape. We've been talking about, on all the major indices, we've been talking about this sort of, there's no other way to put it. This really looks more like a bear flag than anything else. And usually a bear flag shows up about halfway through a move down. So this is what we're seeing, is we're seeing the price break down through there. And without so much the benefit of a lower high, which is rare, this thing is just melting down. So we have truly bearish price action, especially in the Russell, because we're seeing, at least as of today, we're seeing very, very close to, within a point or two, of retesting the August lows. And no other index is even close to that. So this is not particularly a good sign that the Russell is leading things lower. This is a good sentiment indicator of fund managers, because fund managers usually have very big positions that they're managing, and what they don't want to do is be holding on to huge positions on the Russell, because they're very illiquid stocks compared to something like a GE or other blue chips. So longer term, this is what I see going on here, is I see the Russell in the process of coming down to about a 20% drop, and that's going to be a retest of last October here at about the 1037 to 1040 level on the Russell. So in other words, I see this coming down to this point there. We may see a lower high set up first before that occurs. It depends on how many sellers that we have. And from here, I think sometime in the fourth quarter, we're going to see an extraordinarily strong relief rally from this. Now, this is going to make everybody happy again. Everybody's going to think that all the problems are over with as we rally higher into this. But ultimately, I think unless something is fixed here, unless something changes fundamentally, I think what the market is doing is discounting in an earnings recession. So technically the economy's not in recession right now. We don't have 2 consecutive quarters of negative GDP growth, but I'm not sure that the market necessarily trusts the numbers that the government is putting out right now. Right now we're seeing a definite earnings recession in just about everything due to a stronger dollar, and 40% of S&P earnings are coming from overseas. And we all know that just about every other region in the world right now is in some form of recession. So the U.S. can't go this alone, and what we're seeing right now is the market discounting in an earnings recession. So again, the market can't go down forever, and so what we'll see is when the market basically runs out of sellers, we're going to see a lot of covering. We'll see an extraordinarily strong rally. We'll see too many people jump on board thinking that all the problems are fixed. But I think this will take a few months to play out, but ultimately I think that'll be the right shoulder, and we're going to be retesting this level down here. So how can we play something like this? Well, I think the best way that we can play something like this is, of course, going against the crowd. The crowd down here is going to be thinking that, oh my gosh, this thing is just completely falling apart. I'm going to go bearish on the Russell. And what they're not going to see and not going to handle very well is the relief rally that occurs. So when too many people see the same thing, too many people will be wrong. The majority will be wrong. We'll see a relief rally sometime, whether it's late October or whether it's November, so we'll see something like that, okay? And so I think the highest probability trade down here is going to be selling into the fear and using that extraordinarily high implied volatility that will no doubt spike, and we can set up out-of-the-money put spreads down here in the 800s on the RUT or 80 on the IWM. I mean, these will be a long way out of the money, and let's wait until we get a decent rally up here, and then we can sell outside of the recent highs. I mean, we can get these enormously wide iron condors that allow us to sleep at night without the drama. But selling against the direction of the crowd is really our key here, especially these put spreads to the downside. I think these are the highest edge that you can hope for. So that's it for today's Market Minute. I'm not going to be producing any more Market Minutes this week. I'm going to be traveling to the town of Memphis the rest of this week. So I will see you back here next Monday. Thanks for listening, and we'll see you soon.